it's better to practice discipline with your rules when you're starting out and lose money doing that because it will help you in the long run. As you get better, you realize where you can have flexibility, right? It's jazz. Hey everyone, welcome to the Anarchy Podcast. 99% of traders will never make consistent profits. So why listen to the 99% of advice? On this show, we're going to challenge some of the most hallowed and repeated tenets of trading, and in doing so, set you up to succeed where others fail. Spoiler alert, we don't have a secret strategy or magic wand that will let you skip out on the hard work of learning the markets, but we can debunk viewpoints that are holding you back. If that sounds good to you, come join us. Hello, everyone, and welcome to the Anarchy Day Trading Podcast. Thanks for joining us once again. We thought we'd do an episode just answering your questions that a lot of you have sent in. We really appreciate all the emails and the DMs on Twitter, and we've gotten a lot of questions. And so we've kind of compiled them. We actually went over some of these questions, a lot of questions in our masterclass that went on last week. There was some really good stuff. So figured we'd, try to respond to some of these questions and give some answers. Jordan, what's up?
Nothing much. Just looking forward to a new week doing some trading. Was in Singapore last week for a conference, and so actually didn't trade for a couple days there, and also was just enjoying. I'd never been to Singapore. Super expensive though, 4 times more expensive than Thailand. Like I went and like a can of Pringles here is about a dollar. So an actual can of Pringles is a dollar for the small can. In Singapore, it's $4. And so like everything was 4 times more expensive. So it was absolutely insane.
Good grief. Well, it's good to have you back. I'm trying not to whenever I get near the end, so we talked about this earlier, but finishing up we're trying a bunch of different futures prop firms right now, and I'm trying one out that I'm right near the end of. Whenever I get to the end of getting close to finishing one up, I always tend to get worse because I tend to push. So this week I'm going to try to. I'm essentially one trade away from passing, and I'm trying not to get rushed. So I'm excited about the trading week coming forward. I guess I'll start us off. We have a list of questions here. Our first one is from Brent. Brent sent in a question essentially asking, "What do you mean by structures you looked for? You look for?" So we've talked about certain structures in the market that we look for before we buy. He's asking, like, what do you mean by that? Essentially, I'm taking this to kind of mean, I don't know. I mean, we kind of diss candlestick patterns.
Yeah,
So
I was going to say, I think he's asking what's the difference between structure and
yeah,
candlestick patterns.
if we kind of diss candlestick patterns, what do you mean by structures? And is that just another fancy name for candlestick patterns? What are we talking about here, Jordan?
Honestly, the difference between candlestick patterns and price structure is candlestick patterns. In my opinion, and maybe you're differently, but in my opinion, a candlestick pattern is you just go look at a chart and you go, oh, I see an upside down bat wing, butterfly flying in the sky type of pattern. I'm going to take a trade. Looking at structure is actually going, okay, here's the price is actually looking at price action, right? So it's looking at, okay, price has been doing this. It's the big picture. Taking like I feel like candlestick patterns are usually taking the last 20, 30 minutes, whatever it is. Let's say if you're trading on the 1 minute, then a candlestick pattern would be trading, taking the last 20 or 30 minutes into consideration. But if you're trading with with structure, it means you're taking a look at price as a whole and you say, based off of my implicit learning, so based off of what I've learned over the past, few years, this structure leads me to think that this is the way price is going to go because of what I've seen before, not because of I see a bullish flag pattern, so I'm just going to enter here because price is going to go up just because I see this bullish flag pattern. Why I'm saying that, Dow is currently having a bullish flag pattern. If you really wanted to get to, if you wanted, I'm
Yeah,
currently looking at what right now on the chart.
I think you're right on this. I mean, my definition of, kind of why we think candlestick patterns are kind of worthless is essentially candlestick patterns are price action boiled down and simplified to a point where they're no longer useful, right? Like it's impossible. When we say trading, structures and price action that we like, obviously, yeah, you're looking at how prices and how the chart looks. Um, but the problem with candlestick patterns is you've boiled it down to the point where it's no longer useful. Where it's like, hey, you see this doji, you see, and it's going to reverse, or you see this whatever, right? There's literally hundreds of them. Um, it's easy to sell, it's easy to explain. You can teach and memorize candlestick patterns. You can't teach, and memorize just price action. That doesn't mean we don't look for certain things. I look for certain, kind of structures and in the market. I avoid saying patterns just to avoid confusing it with candlestick patterns. But all that means is I do look for at how the price looks, but candlestick patterns are not useful. They're so simplified to a point where they're just trying to define something to explain it and make it really, really easy to explain, but they're no longer useful. That's I think, my take on that, the difference.
Yeah, I agree with you. I agree with you.
Yeah.
One is actually using something that you've learned and basing it off of information, and one is basing it off of voodoo.
Yeah, and again, this is where we preach this a lot, and we went over this extensively in our masterclass, but we believe that successful trading is based off of intuition, all of it. It's not based off of candlestick patterns. Those are not indicative of future, price change. So, getting yourself very, very familiar with how the market moves allows you to get a feel for the market. And those structures, the way the price moves is far more complex than just, a bullish flag pattern. And it's way more complex. And it means those kind of oversimplified definitions for these candlestick patterns are essentially worthless. So, okay, so that was Brent's question. Brian sent in a question asking, how do you stop taking profit too soon? He says, I tend to close a trade the second it starts going against me, and if it's ahead, I'll lose my profit even if it's only $10. So he essentially, if he sees price moving his way, he'll cut. This is very common, by the way, so don't feel bad, Brian. This is very, very common. Jordan, how do we avoid taking profit too soon?
Yeah, I think we already discussed this on the on our mastercast class a little bit actually. But the fact is, in order to, and I think we actually had didn't we do a whole podcast on this recently? I think so. But the fact is, there's two ways to do it. One, create rules whereby you don't take profit early. Okay, so that rule could be, okay, I don't take profit early unless this happens. So decide to come up with some rules before you start trading for the day that you will then follow. So that could be like for me, okay, if price goes 1R, I move my stop loss to break even. That's my rule. Now, I've played around with that. There's times when I kick myself for doing it. There's times when I don't do it, right? Like it's all based on feel. Sometimes I don't. If I don't like price action, like there's a bunch of different reasons. My rules are a little bit loose on it, but the fact is I don't take profit early. So for me, I will never close a trade unless it hits my take profit or it consolidates for a certain amount of time. So come up with some rules that will keep you from taking profit early. So for what those actual rules are for me is I always set my take profit before the trade and I don't move it. And I don't close my trade early unless it consolidates for longer than a half hour. So those are two. So if it's been consolidating for a half hour, then I no longer know where the trade is going because based off of my analysis, now it doesn't on a 30 minute. If it's been consolidating, I don't know. So I can close the trade, but I have a rule to when I close the trade, and if it doesn't fit that rule, then again I don't do that. So that's kind of what I do.
Yeah, and I'll just add, when you say you're kind of are a little bit loosey goosey on those rules, I would encourage newer traders to to not be at all, which is
Yeah,
like
agreed. Agreed.
well, no, and this is not at all a problem for you. It's just that it's better to practice discipline with your rules when you're starting out and lose money doing that because it will help you in the long run. As you get better, you realize where you can have flexibility, right? It's jazz, right? As you become a really good jazz musician, you can literally play almost any note and get away with it because you know how to play within the chaos and within the rules and when to break and bend the rules, right? You listen to a really good jazz musician, they can play completely dissonant notes that should not work and they can make it work because they have the feel, right? They have the groove for the music. If I tried to play that, it would sound ridiculous. Yeah, you have to kind of stick within your scales and the chords that make sense as a beginner, and then you can kind of afford to have some flexibility going on. So just make sure that, guys, as you're beginning, be really, really hard on yourself with sticking with your rules. And as you get better, then you can afford some more flexibility. It's typically what we would tell a newer trader.
Yeah, agreed.
Okay, Mike sent in question. How do you overcome switching strategies? Again, really common one. How do you avoid it? And maybe I guess avoid the temptation, resist the temptation of switching strategies when things aren't working out. That's a hard temptation.
Yeah, I mean, mentally, you only switch strategies because you feel like what you're doing isn't working, right? So the oversimplification of the answer is trust the process, like trust the fact that it doesn't matter. Your strategy doesn't matter. You can be successful with whatever you want to do. So find someone who trades that you respect, that you like, and you trust that they know what they're doing. And then just copy them, right? Because you're just going to copy, their idea. You copy their idea. Don't copy trade. Obviously, go listen to our copy trading podcast if you want to know our thoughts on that one. But don't copy trade them, but just copy their style because now you know that the style works. So find someone that you trust, that you verified that their trading actually makes money for them. And this could be if they post broker statements, if they trade live, things like that. And then that's your style. That's what you're going to go. It appeals to you, and then just copy it because now you know the strategy works because there's people using that strategy, and then that's all you need to do.
Yep. Yeah, it's a mentality. It's a mentality change. It's a mentality change. If you have the mentality that it's a technique issue and a strategy issue, which is, by the way, the mentality that vast majority of beginners and even a lot of, honestly, it's the vast majority of traders believe, right? If you have that mentality, then yeah, switching strategies is going to be your kind of modus operandi, right? It's going to be your go-to because if you're trading and you're not making money, then obviously it must be your strategy, must be your system. So you're going to keep switching that. This is a huge mentality change, but once you get that change that mentality of, oh, it's not my strategy, it's me, right? It's just trading enough until I get a feel. If I can do that, then if I just need to develop a feel, then my strategy, like you just said, Jordan, it doesn't matter really, as long as the strategy is somewhat, structured to a point where it's been useful and there's people who use it who've used it before. Well, now you just need to put the time in. And so if you have a problem with switching strategies, your mindset, your whole idea of what makes successful trading is, in our opinion, flawed. You need to change that mindset to realize, hey, it's not your strategy, it's you. And if it's just you, then that really actually takes a lot of pressure off, right? All of a sudden you can go, oh, I just need to put the time in. Just need to put the time and energy into it. And most people don't. Most people end up switching strategies a million times. We did. It took us a little while before we kind of came to this conclusion and realized, oh wait, we just gotta put our nose down and figure it out.